what style of music do you want? I'm going to get like some cool intro music for you. So what does Ozeco want as intro music?
That's a good question. I don't know, I'm thinking something a bit jazzy, like, sometimes in podcasts, you've got like a bit of jazz at the beginning of like a mystery.
Like a mysterious jazz.
I mean, I trust you on the music for the start of the podcast.
All right, cool. Jazz is good. Hello and welcome to the Margin of Sanity podcast. Today, I'm honored to welcome the incredible Ozeco onto the show as our first ever guest. Ozeco's Crack the Market publication is easily one of my all-time favorite reads on Substack. And if you don't know him, you should know him. Ozeco's coverage is both broad-reaching and detailed. And I think what I really appreciate is the way he covers individual companies and niche sectors within specific global megatrends, from healthcare to reshoring to our main topic today, electrification. If you didn't know, the world needs more and more power each year, and with the rise of AI data centers, that demand is only growing. Whether it's generated by natural gas, nuclear, solar, or wind, it's all going to become electricity in the end. Here in the West, our grid is as important to our civilization as it is unfit to meet the rising electricity needs of the future. It is a bipartisan supercycle, it is a worldwide megatrend, and it's going to make some people a hell of a lot of money. So ladies and gentlemen, I introduce to you the author of Crack the Market, the writer of Electricity is the New Oil, and the hunter of bottlenecks in the global race for energy security and electrification. He is also the co-manager of a multi-billion-dollar portfolio. Margin of Sanity is proud to welcome Ozeco. All right, so here's just a few stats that I pulled up that I think kind of encapsulate why this topic of electrification as like a mega trend, right, was so interesting. So this is from Deloitte. By 2050, they're saying that the world is facing an estimated $14.3 trillion shortfall in grid investment. And in the EU, almost half of all distribution lines are over 40 years old. So I guess we'll start here. What got you so interested, besides stats like this that are so comprehensive, in this topic of electrification in general?
It's a very good question. I think electrification is a word that I've heard for years now. But for me, it was really tied to both the fact that we're moving to a renewable energy-based system, so trying to decarbonize energy generation. And the other side of it was more the use side. So how do you electrify heating, transportation, industry? But the grid was, for me, something I'd never thought about. I mean, you just think about electricity as being in your home. You flip a switch and the light turns on. But the fact that you actually need to invest in this grid, that this grid needs to support this transformation of our economy from a fossil fuel-based economy to an electricity-based economy, I think was very surprising to me. And just the level of investment that were needed and that hadn't been done for decades prior was really shocking. I think people are just waking up to the fact that we've got a very old grid system. We've got blackouts. We've invested a lot in renewable, but unfortunately can't use all of it because of the intermittency of the energy source. So it's, grid is kind of, it's the missing piece of this whole equation, I think.
Yeah. And this is what I think is what attracts me to this is that I think a lot of the time when we talk about renewables, we talk about electrification and kind of the future of energy, we talk about the production and we talk about nuclear versus natural gas, or we talk about SMRs versus natural gas or coal. We can talk about I think it's China's something like 70% of their power generation is still coal. And people will point to, they have more nuclear plants than anyone else, but they also have the larger population than anyone else. And it's fitting that that you're French, because I believe France is the number one nuclear power generator per capita.
Absolutely.
Don't quote me on that exactly.
It's like 70% of the mix, yeah.
Yeah. And so I think what's so appealing to an investor with grid is it's sort of like, okay, whether it's wind or solar, whether it's Republicans or Democrats, the grid has to be built up. Like there's no way around. We need more power. And then I think with AI and data centers, this just put it into the headlines. And now it's like this process of investors trying to figure out exactly where to position. But so I guess next, so you have the amazing electrification is the new oil right up on your Substack. And there's so much here that's like great for anyone who's just trying to get their mind around this. But maybe we can just briefly, you can touch on the stages of how power goes from a lump of coal or a piece of uranium or a solar flare to my recording device, my light bulb, my oven, etc. Those sort of
Absolutely.
Generation, transmission, right?
Absolutely. I mean, we take electricity for granted, but electricity is actually quite complex because you can't store it compared to oil or gas. So you need to produce it and then right away send it to the end user. And so how it works is you first have to generate that electricity. So that's what people think of as a nuclear power plant, gas-fired power plant, solar, wind, where the electrons are actually generated through either using turbines in the case of gas or coal, or using wind or solar. Then you transmit that electricity. So that's the TSOs and DSOs, the actual operators of the infrastructure that send that electricity. You need a lot of infrastructure there. You need substations to change the voltage of the electricity. And then it arrives at the end user, basically, that is either the industrial end user or the household. And so there's a whole value chain that's hidden away, basically, from the producer right up until the electricity is actually used. That requires all of this investment. And so when we're talking about $1 that needs to be invested in infrastructure, in grid infrastructure, for every dollar of renewable energy, that's what we're talking about. All this infrastructure in between that's been neglected for decades.
Yeah. I mean, you brought up the dollar in renewables for a dollar in networks. This is a quote straight from you. The IEA estimates that for every €1 invested in renewables, at least €1 must go into networks and €1.25 in advanced economies. But today, this is nuts. Today, only 22 cents go into the grid for every dollar spent on power generation. So we're creating an assload of power that we can't use for anything, basically, because we can't get it onto the grid. Yeah, for something as fundamental as energy. It's like as fundamental a bottleneck as a bunch of farmland but no fertilizer or something. Or even worse, like no way to get the food to the people. Yeah.
Absolutely. That's a very good way to put it. And I think what people miss as well is that a lot of people have been focused on thinking about investing in these utilities and the people that actually generate the electricity, which is usually not regulated. So there's a lot of competition there. And you see prices of electricity fluctuates a lot in Europe, in particular, linked to gas prices. But I think what's very interesting about grid investments and grid operators, it's a regulated business. Usually it's kind of a natural monopoly to own the electricity infrastructure and network within a country. Mm-hmm. And so you've got regulated returns on the capital that you put in the ground for those grid operators. So in also an uncertain time, I think all this grid infrastructure is a very interesting part of the market for investors to look at. And it's one that's growing very quickly, which wasn't the case for decades when we were more focused about bringing the cost of electricity down rather than actually investing for growth.
Yeah.
Which is what's happening now.
Yeah. There's so many places we could take this. I guess let's just start with one of the things I'm curious about, because usually when I think about anything related to infrastructure, utilities, energy, I'm always thinking about the US, just because I'm from there, especially when it comes to my allocation towards copper. The large distances between everything in America bodes well for that. So that's kind of always where I think. But are you focused on Europe here, on the US? Is there a way to invest in this globally? I mean, geographically speaking, where do you feel your heart pulls you?
It's a good question because I think this is fundamentally a global structural trend. Electrification, the drivers are electric vehicles, AI data centers, heat pumps, electrification of industry. All of these trends we're seeing globally, of course. Mm-hmm. But for me, it's more acute in Europe and the US because that's where you've seen the fewest investments in the last decade because there's been no growth in electricity demand, at least in the last 2 decades in the US and in Europe. There's actually been, I think, a contraction by 10% of electricity demand since 2009. Mm-hmm. So there's really an acute need for investment there. And that's where the investments have really started to show up. So I think investors should really focus on those two geographies. And depending on how you want to play it, you can have homegrown integrated utilities, grid operators in those geographies, or you could also have equipment makers that sell to all types of geographies, all types of countries that need to invest in their infrastructure. I'm sure in Asia there's the same trend, but unfortunately I haven't really dug there that much. But I think that's maybe a future deep dive.
Good luck. I'll have you back on and we'll talk about the Chinese grid, because I can only imagine probably cables going to nowhere in some places and something exceptional in some other place. It's such an interesting economy. I think part of this, in my mind anyway, and you correct me if I'm wrong, when we talk about energy transition, of course, the conversation usually goes to renewables, wind and solar. And I'm not here to talk wind versus solar versus this or that. But I think one of the things that makes this interesting to me is it's sort of like no matter how the cookie crumbles, no matter what technological advancements we have, I think the future that everyone should want for electricity is stability, security, decarbonization. Of course, it has to be able to support the AI data center energy boom, and it has to be able to basically adapt. And I think something people usually underestimate is how difficult it is to bring all of these different sources of electricity together onto one grid at the right frequency. It's like a technical challenge to regulate a grid and to keep the lights on, essentially. And so as much as we haven't had a huge surge in energy demand in the last maybe 30 years, what we have had is a diversification of the source of that electricity. And I think it doesn't get as many headlines, but I think that's something that I love about this investment thesis, essentially, is that it's like, even if you have a complete revolution in nuclear energy in the US, which we are due and I would vote for 100%, you still have to bring that baseload power to the end user. And you still have to combine it with natural gas and even coal generation in some places. The strain on the grid from all of that, not counting population growth and things like that, I think it creates a challenge, even if energy demand falls short of what we expect over the next 20 years. I think the grid still needs to be updated regardless.
Absolutely. I mean, I think you touched on a very important point. It's the fact that this grid is aging, so it needs replacing, but also we're moving from kind of a very simple network system that's just bringing electrons from the producers, the base load power plants that have been there forever, to the end user. And tomorrow you're talking about a decentralized energy system. No, as you said, no matter the energy source that we choose to power our economy tomorrow, we're going to need a smarter grid, a more resilient grid. You know, we haven't really talked about, but climate change, fires in particular are a big danger now for grids and for stability. Same for cybersecurity and cyber threats. So as we go into a more uncertain, more complex world, grids are going to need to adapt. And this requires a lot of intelligence, a lot of capital, a lot of renovation. And so there's a lot of different, kind of sellers of solutions that can help in making this grid resilient. And what we've seen in Europe in particular with blackouts in the Iberian Peninsula have really shocked, I think, the population, policymakers. So this is happening. I mean, this, as you mentioned, this is not the question of what is our energy source tomorrow? How do we produce electrons? It's really about how do we make sure that the light stays on? We're trying to reshore the production of critical technologies in the West. We're facing wars. We need to invest in our critical infrastructure. We haven't done so for decades. And so this is what makes this so interesting, even taking away this decarbonization and this AI data center topic, which is on top of that compounding the need for investments.
Yeah, this is my thoughts exactly. And it's funny, I was in Spain, I live in Spain, and I was here during the blackouts. And I had just been working on copper, researching that position and learning about grids. I essentially was getting interested in some of those land bridge, Texas Pacific Land, all of those Permian Basin type companies that people get interested in. I don't own any of them, but I was looking into them, and a friend of mine said, well, you really should learn how an electricity grid works if you're going to invest in energy. And so I was researching that big power outage that they had in Texas back in, I want to say that was 2021, 2022, somewhere around there. And I don't know if you know about this, but basically all the wind turbines froze. And believe it or not, Texas's energy grid is like 30% wind power.
Wow.
Because West Texas is so windy. And why waste our natural gas and oil that we can sell? Why waste it on our own electricity when we can just power it with wind? But the temperature dropped and it froze those turbines. And because there's no inertia with things like solar and wind, I'm not an engineer here, but basically they had to do essentially a black start of the grid. And that's what I was afraid was happening here. So it's my long-winded way of saying when the Iberian Peninsula went dark, I was like filling up water jugs and I was getting ready for Armageddon because I figured it would be 3 or 4 days. Incredibly, they got it going. But you touched on regulators. And I think one of the things that makes this such a challenge is you're not just dealing with the technical engineering aspects, but you're dealing with sometimes international regulatory agencies working with one another, especially in Europe. This is like a big thing I've heard discussed a lot is bringing power from one country to another. And then you have the local regulators, you have multiple companies involved. So I think the organizational clusterfuck essentially is, it makes a lot of sense why we haven't caught up with our own needs in the West. And I'm curious kind of how you think about regulators and in Europe or the US and their role in this transition and how it might affect some of the positions. And I want to talk companies soon, but how it might affect some of those prospective pick and shovel type plays. Like who's most exposed to regulation risk in this chain?
Absolutely. I think this is so critical because in the last years, we've seen how regulatory complications can frankly throw off investment cases, particularly in renewables, where you had a boom in demand for renewable energy, but because of problems into prices, interest rates, bottlenecks in permitting, and other issues, you've had a kind of today a pullback of utilities from investing in renewable and redirecting capital towards grid investments. And I think the regulatory lens is super important to understand why grids are safe in a sense, because the regulators, their focus is on making sure that the people in the country have reliable, cheap, and decarbonized energy. And so this has been the focus for some time, trying to bring as much energy into the system as possible. And today, I think, if I'm not mistaken, we've got something like 3,000 gigawatts of renewable energy that's blocked basically within queues of interconnections because of the lack of investment in grids. So there's been a renewed focus on making sure the regulatory framework was helping basically grid operators invest. And what happened before is that investing in grids wasn't really making you money because it's the regulator that sets the allowed returns, right? So what has happened is that regulators have come back to the drawing board and basically increased dramatically the allowable returns for these grid operators to incentivize them to plow money into this infrastructure, which has been the case. I mean, you've seen like 200% increase in investment from those grid operators and integrated utilities into networks. And I think this framework now is stable for the next 5-10 years. And this is critical because it gives you some visibility both for operators that are the ones actually putting the capital in, but also for the whole supply chain, equipment providers, all the solution providers that are basically selling into those end markets. And so you're seeing now a rise. Just to give you some numbers on how incredible this shift had been. I mean, in Europe, I think investments in grid. So we've seen a 15% increase in investments year over year in grids. But what I think is even more important is what's happening in Europe. So we were talking about how grid investments, how poor they've been in the last decade. Basically, in the last decade in Europe, we invested 30 billion euros per year in the grid. What's going to happen is that in the next decade, we're going to invest 70 billion per year. And then over the next 2 decades, 2030 to 2050, it's forecasted that we're going to invest north of 100 billion, 134 billion to be exact. We're talking about a multi-decade opportunity. I mean, this is, we're talking about 40 or 50-year-old grids on average in the US and in Europe. And we've talked about all the stuff that needs to happen, not just replacing them, but renovating, making them smart, and not even thinking about all the load growth, the electricity demand. that I think is impossible to forecast. Today in the US, people say there's going to be 3% electricity growth. All the deals that we're seeing in AI data center, open AI by 2033, it's probably going to consume as much electricity or energy as India. We're talking huge numbers that maybe will not be realized. But either way, we need to get going and invest in grids.
One of the things I've heard with OpenAI and all of these data center projects is that there's this kind of, I don't want to say assumption, but I guess a rumor going around that has some merit that they'll try to build their own natural gas plants, use SMRs to bridge the gap, and basically invest in their own power. I mean, I know Microsoft restarted 3 Mile Island in Pennsylvania, and there is this kind of thing I wonder about, which is when we talk about the power demand of AI, in America, if you have an AI data center that is driving everyone's electricity costs up, soon you will not have an AI data center. I mean, it's a real, and I mean this as like, yes, there's a regulatory risk, but I guess my point is I think any rational actor running an AI company understands this and understands that if they want to be able to build these data centers and be welcomed into these communities, they cannot have people worried about electricity costs rising. And I think right now we might even be seeing some of that happening, but I don't know if that's a sustainable option. And I wonder, I don't know how it's playing out in Europe, but I sort of wonder about that. Like if I was going to invest in a pick and shovel in electricity grid infrastructure, I think I would be interested in one that would also benefit, at least marginally, from these sort of, bespoke is the wrong word, but SMRs, natural gas plants being built by the tech companies themselves. I think that's I'm curious if you have any thoughts on something like that.
I think this is so important because there's really a tension between the AI race, which really is based on energy and cheap energy at that, and consumers, where we saw that inflation can topple governments. So as a government, you want to make sure that energy stays relatively cheap and accessible. So I think this makes a very strong case for this whole entire electrification value chain, because as AI data center operators, you want to really optimize the footprint of your data center. So you want the most efficient equipment, you want electricity everywhere, you want the best, the most efficient HVAC, the most... but as you said, you also want, hopefully, to invest in an energy source to be less reliant on the grid, both for reasons of affordability, acceptability, but also for reasons of resilience. We talked about the Texas grid, we talked about the Iberian grid. And these are markets where data centers are flooding in because it's where you've got cheap electricity. So that's where a lot of these guys also can bring in, UPSs, uninterruptible power systems. You want to be able to have energy on site, and you want to contribute to the broader energy security of the country. The issue is all the equipment makers for energy systems are basically running out of capacity. I mean, when you think about the GE Vernovas or Siemens Energy on the gas turbine side, when you're thinking of wind, thinking of solar with First Solar, I mean, all these guys have backlogs stretching into 2030s now. And so, there's a real tension there. And that's why I think we've seen, I don't know if you've seen the deals with Bloom Energy as well. Basically, everyone that can produce systems that can produce energy is getting contracted. Yeah, it's a huge race. And I think there's a lot of winners, but you've got to pick your risk profile, I think, as an investor. Where do you want to be in the value chain? How much upside or volatility are you comfortable with? And I think there's a lot of options for investors to get exposed to this, depending on their risk appetite.
So let's talk companies for a little bit, because I have a wild card energy transition pick and shovel for you, but I'll save it.
Excited to hear it.
We'll see if you've heard about this before, but it's something that kind of keeps popping into my brain. So when we talk about power generation, we talk about the grid operators, equipment providers, service providers. There's the cables element of this, Prysmian, Nexans, there's batteries, and then, data center power in and of itself. But do you have a preference for any of these parts of the energy transmission, distribution, supply chain? Is there a part of this that you're more interested in than another? Are there certain companies that stand out to you as like desert island type plays?
Absolutely. I mean, I think there's a few ways to play it in my view. There's the whole, we talked about energy generation, energy transmission. I think in particular for me, grid operators are a very interesting way to play it because they've been viewed as bond proxies for a very long time. I mean, we're talking about companies that trade very cheaply, that trade linked to bond yields, had no growth, very defensive because we talked about the completely regulated returns. And now these guys, they've got a need for capital. So that's always to be watched. Of course, they need to raise capital to invest in those grids, but they've got regulated returns that are on their way up. They've got incredible growth and they've got regulated returns. So I think a way to play this whole theme of electrification is grids if you want a more defensive bias. I think utilities are starting to be more interesting, especially in the US, because they were historically cheap and we're seeing power prices going up. But as we said, gas is always a wild card. Gas can always bring prices down. There's the political factor. I think this is something I'd keep in mind, but it wouldn't be for me a buy and hold in utilities because it's a very complex area.
Right.
And I think, as you mentioned, picks and shovels for me are the way to go. You've got multiple avenues. You've got the ones that are pure players in grids. I'm thinking Quanta Services, Itron, Hubble. So these guys are providing equipment to these grid operators, to these integrated utilities. And these guys are exposed to what we talked about, the doubling, quadrupling of investments into power grids. So I really like those companies because they're pure players. They're usually very strong at what they're doing. They've got amazing visibility because of very strong backlog. And usually there's a mix margin story in there as well. So I think these are very clean ways to play it. Cables, I think, are a no-brainer because cables is, there's very, very few companies there. Cables have incredible visibility and cables are required everywhere. I mean, they're required in interconnectors between countries, connecting the windmills to the mainland, but also in data centers. They're required in buildings. They're required everywhere. I mean, electrification is really based on cables. And these guys have gone from commodity plays to of super players for the electrification. And they remain quite cheap versus cap goods, actually, despite their very impressive stock performance.
Well, my only concern with cable companies and in general with commodity type things is, if everyone's racing to get the contract, eventually, I think there's a Warren Buffett quote. It's like, in the commodity business, it's hard to be smarter than your dumbest competitor. And I'm not sure, I don't know that landscape. You know it a lot better than me with cables and transformers. Are there like companies that have these structural competitive advantages that would allow them to like really capture the upside and get some boosts to their margins? Is there enough consolidation, I guess is my question, in the cable sector in either Europe or the US?
Absolutely. Yeah, it's super consolidated. I think that's why it's interesting because there's such a huge demand and it's a bit like gas turbines. I mean, now if you're a grid operator coming to these guys, you're looking at 5-10 years of wait time. So they can be very picky with the contracts that they take. And so there's also a margin story, which I think is underappreciated because these guys are pruning their portfolios. They're being very selective. And the execution has been better than historical because it's quite a complex. I mean, when you're putting undersea cables, it's quite a challenging endeavor. But there's like 3 players there in the West, no Chinese competition for now. So I think you've got a couple of good years still before competition arrives. And it takes, I don't know, like 3 or 5 years to build a new cable manufacturing plant. So that's it's quite visible right now.
Did I just read something about the UK and Morocco building a interconnection cable between the two countries?
I've seen that as well, yes. Yeah. I've seen it discussed for a little bit, but yeah, this is good for these guys, I guess.
Yeah, that sounds like a terrible idea for the countries, but great for the cable manufacturers.
We'll take it. Absolutely.
So when we talk about batteries, and I'm not necessarily sold on battery storage as like the sort of solve to the lack of storage with something like wind and solar, but I am a big sort of end game EV believer. Like I think electric vehicles are the future. Generally speaking, by the way, I'm of the view that pretty much regardless of, even if we woke up tomorrow and the scientists said, actually, we were all wrong, there's no such thing as climate change, I think this would all need to happen anyway. Because at the end of the day, fossil fuels are a fixed resource. and we're consuming them at a faster rate than ever. And my feeling has always been that to use fossil fuels, to use oil, natural gas, even hydrogen or coal for energy generation, for electric light, for transportation, things that like we could easily electrify, as opposed to like, Caterpillar vehicles out in mines in distant parts of the country. I think that we're basically just wasting good fossil fuels that we could use for feedstock, that we can use for fertilizer and plastics, all the other things that we use fossil fuels for besides what everyone thinks of, right? Which is light and transportation. That's what we usually think of when we think of energy transition, but there's all these other things. In general, how do you see batteries playing a role in the future of the energy grid in the West? Is there some outside exposure that sort of makes this a more difficult energy play?
It's actually a very good question. I'm currently researching the battery space. I'm not as knowledgeable on it as other parts of the value chain, but I know that it's becoming a big thing, particularly in Europe, where a lot of utilities are pivoting actually from investing in renewables to investing in battery storage. And I think that's linked to quite a few things, but the primary catalysts, I think, have been the incredible decrease in cost of batteries, a bit like solar, which has made the technology a lot more prevalent. We're seeing how cheap Chinese EVs are. And it's the same with grid-scale batteries. It's becoming a very affordable and very logical technology to balance the grid, at least to, as we were talking about, try to avoid blackouts and respond to very short-term peaks in demand. So I think this is coming everywhere. And it needs to be studied because there's frameworks now everywhere to monetize basically batteries. So I think it's becoming a very prized asset, and there's very few producers. I mean, CATL completely dominates the production of batteries, both for EVs and battery storage. So I think that's going to be one of my future deep dives, is going into this market and and looking at some of these players, because I think it's a no-brainer now, and it's a winner takes it all. I think it's such a huge scale game, R&D. If I'm not mistaken, guys like CATL are putting something like 10 billion in R&D every year.
Yeah. Wow.
There's no question that it's going to be a big part of the energy system, and these guys are going to be at the center of it, at least in Europe.
I see that in 2023, the EU actually paid about $4 billion in congestion management costs. So they're basically paying renewable generators to stop producing power. So you could argue that $4 billion a year could reasonably go into purchasing or manufacturing batteries. You might as well, because it's a lot better than paying an energy company to stop producing energy. That cannot be a capital efficient way to manage.
Absolutely. And this is going to get worse. Wow.
Yeah. If you're getting into batteries, you actually might like the nickel write-up, because there's a whole detour about sodium cathode versus nickel cathode. My understanding is that basically in the West, people have what's called range anxiety. And so the chemical makeup of a battery has to be one that
NMC versus LFP and more
exactly. And in China, this is less of a thing. Plus, you could argue that if we're going to have robo-taxi networks that are, let's say Waymo, where they're pretty much going to be fixed to large metropolitan areas like New York, San Francisco, etc., they don't need that much range. What they really need is cheap power and just cheap cost. So you don't need to drive halfway across the country on a charge. You can drive to McDonald's and back. And so it's kind of interesting. And I do think batteries are something that feel like a great idea, but the technical element to me makes it a very dynamic space that I would worry that my lack of chemical engineering would give me a disadvantage in that world. But
absolutely.
So the name Siemens comes up a lot, and I'm curious just about this company in particular, if you're comfortable talking about it. Is this one that you own? Is this a position of yours, one that you're just really interested in? Where does Siemens Energy and just Siemens play a role? It looks like there's two different entities.
Absolutely. Siemens is such a complicated company. I mean, it's always been a very high conviction name for me, I think, particularly in the last years, because I keep seeing them at the cross section of all of the megatrends I'm looking at, whether it be mobility. We talked about grids, a lot of digitization, automation. I mean, these guys are leaders everywhere, pretty much. Mm-hmm. They've got unparalleled skill. They've got a very interesting story as well. I mean, they're at the very start of the telegraph.
Wow.
They're at the very start of a lot of technologies I think of turbines as well, if I'm not mistaken. They invented the dynamo, right? I mean, these guys have been everywhere. Infineon is a spin-off of Siemens. They do Siemens Energy, which does turbines. They do the wind turbines as well. They do the transformers, which are critical as well. We haven't really talked about that, but transformers are one of the big bottlenecks for grid infrastructure. They do Siemens Healthineers, which is the biggest company making equipment for hospitals and finding diseases, basically a med tech company.
Wow.
So these guys are everywhere, but they're too complex. I mean, my issue with Siemens has always been no one understands the company, the capital allocation. How do you create value with such a huge portfolio? What I think is interesting is it's changing. These guys basically have 70 billion euros of optionality within the portfolio of pieces of business they own and that they can probably divest. And so they're very focused on growing the core portfolio, the automation, the electrification, and the mobility, the rail. They've got, the best products pretty much everywhere and broad geographic exposure. And to top it all off, they're one of the 3 EDA providers, so the software providers for the electronics industry, along with the Synopsys and Cadence.
Wow.
And what's not to like with the company? You just need to spend a couple dozen hours
reading about
to understand what the hell they're doing.
Yeah, I'm looking at, I'm just pulling up their, they have like looks like pretty decent margins over time, around 10% net margin. Their return on equity was something like 15%. But my hesitation would 100% be like, okay, and how did they achieve that? What were they investing into? Where was the cash coming? It's always so hard for me. But it's interesting that Siemens doesn't seem, the price return has been okay, but it's not trading at such an insane multiple relative to history from what I can see. Is it that the market hasn't caught on to this yet? Or is it just that it's such a conglomerate style, or at least just such a complicated position that nobody wants to take the time to analyze it?
I think it's really the conglomerate discount and the fact that people can't really be bothered to look at the company right now. I mean, they still have Siemens Energy and Healthineers, which are obscuring the story a little bit. But the management, I think they're laser focused on simplifying the business, on selling adjacent businesses, investing in M&A to build. They've got one of the best industrial software portfolios, maybe the world-leading industrial software portfolio within the business. I mean, it's 6 billion of software, which you would never think that Siemens actually does that.
Yeah.
And these guys have, they've got more than 10% free cash flow margin, mid to high single digit grower, exposed to electrification and automation. I mean, that's the story basically, but you just need to be patient enough for them to clean house and for the market to pay attention. So I think it's still a well-liked and owned company in Europe, but it's still not priced, I think, according to the quality of the business.
Yeah. I think so much of the difference in pricing between, this is my theory, between the US and the UK or not the UK, but the US and Europe, is that so many people just buy S&P funds, even Europeans. And even if you buy a global fund, you're still it's going to be 4% Apple, 4% Microsoft, 4% Amazon, NVIDIA. It's going to be all of these names. And so a lot of people, I'm always interested in fishing in the pond of Europe because I don't think it has this sort of baseline. You can find large companies that are priced fairly. And with Siemens, it seems... Now, I have another question with Siemens, actually. Are they primarily a European operator or are they international?
So they're completely international. Let me tell you, so they're actually 31% exposed to the Americas.
Okay.
A quarter US. So it's a quarter US, a quarter Asia, half Europe.
Okay. Great. Wow.
And exposed to reshoring as well. I mean, they've got very big plants in the US. I know they're very involved in the US grid. And I think they've invested 100 billion in the US in the last decade. So they're not a US company, but they're big in the US.
Wow. Okay.
They're big everywhere.
Yeah, this strikes me as a pretty interesting, all-encompassing way to kind of gain exposure to a lot of different megatrends, which are, by the way, the ones I wouldn't say that I position to benefit from reshoring, but I definitely position to avoid deglobalization risk. You know what I mean?
Yeah.
Not because I don't think that we're reshoring things in the US, but it's more just, I don't necessarily know the timeline on something like that. But I like that Siemens is it has all that diversity, and you're capturing so many different parts of the value chain in this entire sort of giant reinvestment that the West is engaged in right now, just at the beginning, it seems. And okay, so we got to talk Oracle, because I actually have I don't like Oracle.
I think that's fair.
Yeah, I've seen if you look at their long-term debt over time and their share buybacks over time and their earnings per share over time, one starts to begin to wonder.
Can't disagree.
I also just finished, not finished, but I'm almost done with the Apple in China book, and they had some interesting things to say about Oracle. But so I'm curious, this is just the data center management software play, essentially, yeah?
Exactly. And a data infrastructure play. I think it's fair to say that they're basically putting all their chips on the AI revolution and OpenAI with the $300 billion contract they signed with them. So it's a bet that OpenAI will be able to pay the rent for the data centers, which, I mean, seeing who the backers of OpenAI are, I think it's not impossible. But that's really the glaring question at the center of this whole AI value chain, is whether OpenAI is going to be able to fund its growth and whether it's going to stop at some point wanting to become the biggest thing in the world, because these guys have the biggest ambitions I've ever seen. I think they want to invest in $1 trillion or something.
Yeah. Tech Taiwan had an article recently about TSMC, which is one of my largest holdings. And he was talking about how Sam Altman wanted TSMC to invest $7 trillion into new capacity. They said, no, of course not. Are you invested in all of these companies that you have listed?
No, absolutely not. I think for me, it was really to give not an exhaustive view, but I think quite a comprehensive overview of the different layers of the value chain and some of the players that I think are worth having a look at. But another name that I love is Bentley Systems, who does basically the software for infrastructure. So they sell to architecture firms to build wastewater plants, highways, airports, power plants, etc., grids. And so there's a lot of these businesses that are quite niche. Yeah. You've got very strong barriers to entry, amazing business models, and you don't usually see them mentioned. Yeah. You usually have just a couple of companies. So that was the thinking behind trying to help investors navigate this trend and maybe find ways to get exposed that are not as obvious. A bit like what you're doing with copper, which I think is an amazing way to play it.
Yeah. I like the idea of, when it comes to the world changing and everything, trying to figure out where to position yourself, it's really difficult. And I think what we find, I love your approach of top down and bottom up at the same time. Okay, what's happening on the macro side in a predictable way, not like what's going to happen tomorrow in the macro, but what's going to happen over the next 5 or 10 or 50 years. And then just trying to see, okay, well, who's making this happen? And what are the different dynamics at play between these companies? I think there's so much here. I can't wait to read more of your writing on this topic. And I'm curious if any of them are calling to you more than the others now.
I think for me, the Schneider Electric and Siemens, I think are incredibly interesting companies on the electrification side, because these guys they're massive. They do everything. They've got leading positions. And something we haven't really talked about, but I think that people are missing, that half of the decarbonization and even electrification is about new power. Half is energy efficiency. And Schneider Electric is all about efficiency. I mean, these guys have something called the AVEVA software, AVEVA, and they specialize in basically selling all the equipment and the intelligence to monitor and reduce your energy consumption. And I think this is going to be, as we talked about all the bottlenecks that we've got today. Yeah. These guys I think they're a must own in this environment. Cables are very interesting. And I think First Solar, for our US audience, I think is a must watch. And that's a company that you need to look at, because it's, they're at the center of reshoring, electrification, energy sovereignty in the US. They're basically the only integrated and at scale solar manufacturer in the US. And these guys have the biggest barriers to entry that you can imagine, huge backlog, no competition, and so much cash, they don't really know what to do. So
interesting.
I think a company worth having a look at as well.
I think next episode we do together, we got to go deep into at least one of these companies.
Absolutely.
Line item by line item. I'd love to dive into that with you. I don't want to take up too much of your time, but I was going to mention, have you considered, because I've heard this floated and it actually started to make some sense to me, and then it was mentioned at the shareholder meeting. Have you considered Berkshire Hathaway as an energy transition company?
I have never thought of that before, but I know they're one of the biggest power producers, right?
They are one of the biggest power producer utility companies in the US. They have $300 billion in cash. They are looking for a way, and they actually mentioned this at the shareholder meeting. The other thing is the guy, Greg Abel, who's taking over at the company, he used to run Berkshire Hathaway Energy. He's not the insurance guy, he's the energy guy. And here we are.
I've heard of that. That's actually so interesting.
And I wondered,
that's an amazing idea.
I think to myself sometimes, I don't have a very big Berkshire position. It's more of like it was my first stock I bought, and I'm just hanging on. It just reminds me of another time many years ago. But I just think it's such an interesting concept because you have a company that can capitalize all of that themselves. They can pay it straight out of their balance sheet. They need a place to reinvest capital. They have a great reputation in America. They have an incredible rapport with regulators. I think they're just very cautious as a company. And so they might not want to expose investors to the regulatory risk and all that stuff. But it's just something I'll mention. I'm just mentioning, you can just chew on it, keep you up at night a little bit.
That's such a good point. But actually, a lot of business models, I think, in our generation are going to be very capital intensive. And these guys have the most cash. So I think that's also interesting, whether it's AI or energy. Yeah.
Yeah. Well, I've learned that essentially any civilization, right, it's built on first agriculture, then an industrial base, and then services. And our services sector has grown so incredible. I mean, we're over here talking about AI, God, or whatever. and our industrial base, we've outsourced so much of that, at least in the States. And I'm pretty sure Europe too. And
even worse in Europe. Don't worry about it.
Yeah, it's not amazing. Anyway, but yeah, so I think this is just going to be a really interesting time. And I'm so curious how, what you might call reindustrialization, how it really ends up playing out. And if we're even successful in meeting the needs of the next 20, 30, 50 years here in the West, it's a big question to me.
Absolutely. I think that's one of my biggest focus as well, is really this reshoring theme, which is a bit hard to grasp, I think, because there's not a lot of numbers, there's not a lot of transparency. A lot of numbers that are thrown out are also rehashed from previous investment plans, also to please politicians. But I think we're seeing every single country focus more on sovereignty and reshoring, whether it's China, the US, or Europe.
Yeah.
And I think there's going to be incredible opportunities within that space. Just need to find them.
Yeah, exactly. So I want to end with something kind of fun. I want to throw some stuff at you. So first thing I wanted to do, just to end on a fun note, I was thinking some quick word association. So I'll throw some words at you and you just give me your, a quick one word, one phrase, one sentence, what pops into your mind when the word comes up. All right?
Perfect.
All right. Nuclear.
Reliable. Or sovereignty, I guess.
Rare earth.
Big bottleneck, I think, rare earth.
NVIDIA.
Risk. I mean, the center of the new economy, the center of AI.
Natural gas.
I think a big asset for the US, a big liability for Europe. Arguably, I think this is a very tough debate, whether it's a transition energy or not, but I think it's going to be there for decades.
I agree, actually. Gold.
Store of value, I think, these days.
Yeah. Copper.
I think the hidden metal in everything. This is what I've learned from your podcast. Is basically, it's always been there at the center of civilization. Very underestimated, I think. I need to dig into that as well.
Yeah. China.
I think an emerging superpower. I think China is on the up, and we need to be watching, and we need to dig into the Chinese market for sure.
Yeah, 100%. Not to plug my own stuff here, but the Guizhou Maotai write-up, it's also a podcast. It's about the one of the largest companies in China is a liquor company. And let's see if I can get the stats off the top of my head here. Basically, so first of all, their gross margin is like 95%.
This blew my mind. Yeah. I saw that. Actually, I haven't heard the podcast yet, but I'm going to listen to it for sure. And this blew my mind. Yeah.
All right. Next, we got reckless predictions. All right. Is there a bubble?
You know what? This is something I'm about to write on as well. And my take is yes, but so what? It's kind of like how, we know I think everyone knows something crazy is happening right now in AI. But I think how do you play it and how do you protect your wealth from it as well? How do you diversify whilst keeping some upside in what's happening?
Yeah.
Yeah, but no doubt. That's my view. I'm curious to have yours, but no doubt in my mind, yeah.
That's exactly the way I think about it. I haven't sold a single share of Taiwan Semi. I don't plan on selling a single share of Taiwan Semi, but I definitely have moved out of certain large cap tech companies that I think there's real risk to even the companies that are currently investing in AI because they might not get those returns as quickly as people seem to think that they will. And that's going to hurt. There's no way to spend $500 billion on something, not get any return on it, and not have it hurt your stock price. So many of my investments I'm trying to rotate into companies that I think have structural competitive advantages and will do well regardless of how things go with AI. But I'm also trying to be mindful of not exposing myself to companies that could easily get uprooted by AI. And it's an interesting balancing act. Just because these companies aren't profitable doesn't mean they can't fuck up the profits of another company that is profitable,
100%, yeah.
So I try to be mindful of that. And all right, final question is, who else should I talk to and about what and why?
That's a tough question because there's so many incredible writers. I think the strategist is someone that you could talk to because I'm just always surprised by, first of all, how many articles and write-ups he puts out, but also kind of he's got, I think, the same approach of top-down and bottom-up, thinking about big trends. He's worked on a lot of different industries and topics.
Yeah.
So I think he'd be a very interesting person to talk to.
Yeah, he's the next person I'm having.
Really? Okay.
Either him or AK to talk about Caspi, which is its own crazy, crazy world.
Okay, so that's a perfect intro to the next podcast, basically.
Yeah, talking about transition, Anyway, Ozeco, man, thank you so much for coming on. This has been so insightful, enlightening, and just generally pleasant to get to talk to you about all this stuff.
Thank you for having me. Honestly, it's been a pleasure. I really look forward to a future discussion between us.
Oh, yeah.
And I would advise everyone to have a look at your newsletter, Margin of Sanity, and the podcasts are honestly the best I've ever listened to, bar none. I'm always surprised. And I learned so much from them. Honestly, incredible. And highly advise the copper one because I think this is an underrated metal. And a lot of people talk about it very quickly, but you need to take an hour and listen to it.
Thank you, man. I appreciate that. And I can't wait we'll do another one soon. I love it.
Yeah, no, it's been a pleasure. Honestly, I really enjoyed the talk. I think it's actually quite fun. It's quite a fun way to do it, yeah.
I love it. It's perfect.
Absolutely.
Thank you for listening to the Margin of Sanity podcast. And a big thanks to Ozeco for taking the time to come on the show. If you want to check out Ozeco's Substack, the links will be in the show notes, or you can just head on over to Crack the Market on Substack and take a read through some of his incredible write-ups. I really can't recommend them highly enough. Ozeco covers so many different companies, many of which are lesser known, but all of which are critical to the evolution of secular shifts in the global economy. Most recently, he published a write-up on Dassault Systems, a design and engineering software company. He's also written about cable manufacturers, brake-making companies, ASML, and just all sorts of things the market overlooks. Just a reminder, if you enjoy the show and you want to show a little love by dropping a like, a follow, or even just dropping a comment to tell us what you liked or didn't like, that engagement really is a huge help and it helps other people find the show. Just a reminder that we are not financial advisors and none of this is intended as a solicitation to buy or sell any securities. Investing always involves risk. That's all for now. Big thanks to Ozeco at Crack the Market on Substack. Thank you for listening to the Margin of Sanity podcast. I'll talk to you later.